In this video, we will answer the question about why companies go down after they get a great results. And we will use Nvidia as an example for this. Hello everyone, this is Ahmed Saleh. So let's look first at Nvidia results and check were they good results or not. On revenue, we had $35.1 billion in one quarter, amazing, and that was 94% year on year, an amazing result. It came mainly from the data center and the AI revenue, which increased 112% year on year, another great results. Operating income is around 22 billion, 110% year on year, an amazing result. This company is making an operating margin of about 60%. This is something really great. Earning per share is 0.81, it's 103 year on year. So all the results were great. Let's see now how did the stock react. So the results were out on Wednesday after the market closure, and on Thursday the stock was like almost flat, -1%, and yesterday it went down by -3%. That's incredible, right? We are having like a great results, and it's like almost double in every metrics, and then the stock is going down. How come? How come it's going down? 1 minute. Let's see the stock performance due that happened year to date. Actually, the stock tripled year to date. It started at 50 in January, and today it's almost about 150, give or take. So the stock tripled, the result doubled. So actually the stock performance is more than the results. So we have seen this effect, but we have seen it ahead of time. Why? Because always the market discount the results ahead of time. Okay, these results that you have seen here were not a surprise. The market knew that this is going to happen before they are out. How did they know that? Look at the trend. Look at the trend from quarter 3 to quarter 4 to quarter 1 to quarter 2. You can expect what will happen in next quarter, right? You can just draw a trend line and you can estimate what are the results is going to be. And if the results is going to be good, then the market and the traders will buy ahead of that. So that's what we are saying, that the news are discounted in the price. The results are discounted in the price. We already know about these results ahead of time, so I discount them in. Not only this, I know about the results that's coming next week. I can estimate the results that's coming next quarter, and the quarter after, and the quarter after, and the quarter after. So just draw a trend line. And if the results is not as per the trend line, the stock will go down. So even if they achieved 100% year on year next quarter, nothing will happen. Okay. So how does this work? Okay, let's look at this. So there are some rules that you need to be aware of. The results has nothing to do with the stock price. Why? As we said, they are already discounting the price. The market knew about it long time ago, and the stock is reacting ahead of that. All right. So normally the rule is like 6 months to 1 year. There are the results unknown, and then the market will discount them in the price, so they will go out ahead of the results. Even if the results are exceeding analyst expectation, there will be no reaction. Why is that? Because 70% of the results exceed analyst expectation. Okay, that's normal in the stock market. 70% of the results will exceed analyst expectation. Why is that? Because when analysts are doing the report, there are 60 analysts, by the way, doing Nvidia analysis, and they are like, they don't want to be optimistic, so that you buy on their recommendation, and then the stock goes down, and then they said this is because of you. So what they do, they are normally conservative in their analysis and on the price target that they are putting. So it is normal that the company will exceed the analyst expectation and the price target. That's very normal. Okay, we have to take this as a rule. So like why do we see some companies are like rocketing after the results or going up after the results? This is mainly because there are some surprises that that the analysts didn't see before. Like what? Like for example, if Nvidia is having like the results expectation is 100% versus year ago, and this scored, for example, 150% versus year ago, 130% versus year ago. This is a surprise. This is what we call a surprise. Okay. If there are no surprise and they are just doing 100%, it's still 100%. It's a great results. Don't get me wrong. It's a great results, 100% versus year ago. But it is as per analyst expectation or exceeding a little bit analyst expectation, the stock will not move. It has to be a big surprise so that the stock will move upward. Okay, that's the first thing. Or they have to give an excellent forward guidance that the market was not considering this before. And like an amazing forward guidance, they're saying instead of increasing 100% year on year, we are going to increase 150% year on year in the coming quarters. So they still didn't happen, but it will happen in the future. This is what we call forward guidance. They have to do that. Nvidia didn't do that this time. So that's why you see this market reaction and the stock reaction that the stock is going down. There is also a concept, an important concept called buy the rumor and sell the news. What does this mean? I buy because I think the result is going to be good. I buy ahead of time. I buy ahead of time, buy ahead of time. It's a rumor. I didn't see the results. And then when the results are out, I sell. So this is a very important concept that the traders are using called buy the rumor, sell the news. Okay. I hope you enjoyed this video. If you find it useful, then please press like, subscribe, and share it with your friends. And if you have any question, please put it in a comment and I will be happily answering. Thank you very much.